Hey guys, this is Simon with Trade and Perform Coaching. Wanted to do a quick coaching session for the room and then people outside of the room. I don't care who uses it. Just in an effort, continuing effort to help people get profitable, right? So a quick and shameless plug for myself before we get started. The email, if you want to ask for a 3-day pass to the room, or you just have a general question, tradeandperform@gmail.com, TRADE, the letter N perform@gmail.com. Just ask me for a 3-day pass. There is a cost to being in the room. The software, if you want it on your desktop, is $250 a month. If you don't want the software and you just want to be in the room and look at my screens while we're trading, it's $95 a month. So, and no, I'm not open to any conversations about whether I should be charging or should not be charging. That's an old conversation. I've had it many times, and I'm just not interested, right? Plenty of free stuff and free's all over. So, what I want to talk about is the value area. So when you look at a value area, so on this is my NQ chart, and when you look on NQ, right? So I measure the value area from the prior day session. I trade usually during the US session. It's what I care about. I don't care about the 24-hour chart, so we can clear up that particular aspect of the question. These are all regular trading hour charts. So if you looked yesterday, the value area is the blue area. It's where we spent approximately 70% of the time and volume of the prior session. So the worst place to trade within that is something called the point of control, whether it's the time point of control or the volume point of control. That's the worst place to trade. Great target, horrible place to trade. But in general, this is a place that's going to have not much difficulty traveling through and can actually be fairly choppy. So the easier places to grab your trades are outside of that value area. So guys, today's a good example. We had some difficulty trying to grab trades inside the value area. So before I go into this, you have to decide if so all of us are day traders and we're all aggressive if we're day traders, right? The question is, where are we going to be aggressive and how aggressive, right? So I'm pretty comfortable often taking trades almost wherever, right? If my algo sets up and I see it, I'm usually pretty comfortable taking the trade. Sometimes that gets me in a little bit of trouble, but most of the time I work through the day just fine. I'm very good at scalping my way in and out. But as I'm coaching newer traders or traders who are trying to get consistent, and I had this conversation this afternoon with Dietrich, was, hey, well, where's the best place to take the trade? And or where's the place where we have the most consistency? So I'm going to go through an example: CL, ES, and NQ, right? So we're going to start with NQ. The 15.422 to 15.360 was the value area, right? So if you've watched any of the videos or you're familiar with the room, this is what the value. This is what the um, that's what the value area is in between these two lines. And what you'll see is, number one, like when you look through the whole course of the day, you can see that the market traded through there, right? We bounced, we chopped, we held originally. But the problem with the value area is just this. As you're trying to establish a trade to find a turn, if you're trying to get a turn once you're within the value area, that can be difficult to do. Why? Because you can see even after hours, we can trade through it and chop through it quite clearly, right? So here it worked, here it didn't. And so I'm going to try and set up, and then here we just drifted straight through. So I'm going to try and set up a couple of examples of why it is best, if you wanted to make sure you're going to get a high odds setup, to make sure that setup comes outside of value area as opposed to inside of value area. So first of all, we started off the day and we drove up. That's no shock. We're at all-time highs. I generally do not trade the first half hour and did not trade the first half hour today, so I'm not even trading till right here at 9 o'clock. So at 9 a.m., right, at 9 a.m., I already find myself inside of the prior day's value area, right? The two green lines, I'm going to try and break this down so it's clear. This is the first 10 minutes of trading, the high and low, the first 10 minutes of trading. This is the prior day's value area, right? So when you're above the first 10 minutes, we tend to push out. So that was the first clue that we could go higher, and then we were going to drive all the way through here. So why is this important information, right? Why is this important information? So let's say you were somewhat bearish and thought that the market could roll lower this morning. Well, what you're going to see is from these short setups, right? Like this right here is a high odds short setup, right? So at the top of a market, so normally I could take this if we had higher volatility. The volatility is very, very low. So normally I have 12 points of risk on this trade, and I am looking to get at least 12 points out of it. And the problem is I could not get 12 points. I couldn't even get 10 points on this trade to scale, right? There just was no rotation. It was very, very slow, right? So that's problem number one with trading is even when you get a high odds setup, it did extend lower. It just didn't extend to a point where I would normally take a scale. Now, if you look at the other side of that equation, right? If you look at the other side of that equation and you go, okay, well, where did the shorts work if I was looking for shorts? So you'll see where our first algo set up for a short, right? Where that worked was right here. You got a, so for guys in the room, I'm just going to step you all the way through. Yes, this would have been valid for continuation. It did not pull back, and you know I don't take that continuation trade when there's no kind of when there's not any kind of significant pullback. So I would not, and we did not take this long. We did take this short, right? But if you look at why this short worked, you finally got out of the prior day's value area. So remember, and we give that example all the time with a gallon of milk, right? So if a gallon of milk is too, never mind, I'm not going to go into it because if you're not familiar, you're going to say, like, what the hell is he talking about? So forget it. We get outside of the value area. This is the first decent short setup right here. No demand, right? Orthodox engulfing bar, algo on the bottom, triangle down. The only thing that could have been better is had this triangle been right here, but that's very good. We took this short and it extended down the entry on that. I covered it a little bit early, but I believe the original entry was 35. And I think I covered this at 10 or 12, something like that. I think I covered it right here. And I did not retake the short when it extended on the second leg. So that was pretty much my best short of the day. The point I'm trying to show is that once it got out of value area, you had a fantastic chance of that trade working for you. Now, there's another rule. Usually the general rule is, guys, and again, this is geared towards the members in the room, right? They're the ones who are using the software and trying to make money. Damn, I erased everything here, but so let me try and guess. Where was that? Value area high was 15,422. 422. Okay, so generally when you get above value area and there's negatives, the concept of negative space, like in art, right? There's negative space. You can see black space in here, right? Usually the first time back in, your first high odds setup, once you push back in, will give you a counter rotation. That's exactly what happened here. You'll see this only had one component of a high odds setup, didn't qualify. But here you had triangle down, no demand bar, and then you have the little green diamond on top of that bar. That's a high odds trade. That came at 1037. And we were long this actually, and it took a lifetime actually to get the lift out of this. If y'all remember, I think I kicked all of that at 16 and 20. So these were my exits. So this is my entry right here at 06 and a quarter. We kicked it at 16, 1650, I think. Roughly, I'm going fast because I'm tired. And the other one was 20 was the target. But you'll see once we were in here, then it gave you, right? Remember, we've already gotten outside of value. We're trading back into value. Comes back up. This is a 50-60 retrace, which I pointed out in the room. And then it gives a no demand, right? That's the red bar, little yellow diamond underneath. That's your short entry. And you'll see it gave you the push, excuse me, gave you the push all the way back down. And then you'll see again where the next short setup, look at where the short setups are coming from that are high odds. Again, we push all the way back up. I'm trying to see if it's set up anywhere in here. This is no trade. There's not enough evidence here. No trade here. Let's follow through here. No trade, no trade, no trade. That was a valid trade. It was 2 minutes to the close. You had to be nuts to take it. So, and then we got that big news coming off of the Intel number, and they just tanked it. But that was actually a valid short. You'd had to be insane to take it at 2 or 3 minutes to the close, but that's where it worked and it was all outside of value. Okay, that's example number one. Okay, example number two, let's go to CL. And you'll forgive me, I'm a little bit tired, so I'm not going through the in-depthness that I would normally go through. Let me erase all these lines, erase all the profiles. Okay, so on CL, our value area was, pull the chart up, let's minimize this. CL, the value area was, wow, I'm so tired that I cannot see it. Let's clear up these zones. There we go. Roughly 82, let's just call it 8280 to 8180 because I don't want to get super precise. What's the number I have there? 8180 to 8280. It is 8180 to 8280. So $81.80 to $82.80. Okay, so if you look inside there, right, you can see how we swept that entire value area, and I actually had this read correct, but the prior day's point of control got in the way. It was actually quite a frustrating day on CL. I had this correct. We were short through here and got paid, and I missed my entry here for several very technical reasons. But nonetheless, if you'll look, right, if you just avoided taking any trades within this location, look what that left you with. This is the 8 a.m. open, right? So let's go look at our setups outside of value area. And the key here, guys, and again, I'm talking primarily to the members in the room, is look what worked, right? On the trades that set up outside of value area, right? Triangle up, no demand, little yellow dot with the bar to the downside. Bam, that trade right there, this is your entry right here. That bar is your entry right there, 82.96. Your stop is at worst 20 cents. So let's call it, actually it was a little bit more. That bar was really big. Let's see. It was actually 95, 15. Actually, it was 15 cents. It was okay to 08. Let's just call it 15 cents. 83.09, 83.10 would have been the stop. 15 cents, right? That gave you a trade from 82.95, and your maximum favorable excursion before any kind of measurable counter rotation, right, was 82.36. So Ben, at Red Ben Trader, if you're watching it, brother, that was your trade at 813, right? You're above value area. That's the only trade you need for the day right there. That's 82.95 to 82.36. That's let's just call that 60 cents, $600 a contract. It's a good day. This did not set up here as much as I would have liked it to. At least on the prime, there you could have argued that we have an alternative entry here on that, but let's just say it didn't enter, right? Now watch, here's where the other part of that is key, right? So I tried to trade inside a value area and I took two stops, and finally, thank goodness, if you'll look here, we kept getting long triggers signaled, and I finally just said, guys, we took, I think, two stops, and I said, let's stop let's stop trading inside this value area. It's not working right. Like for us to get two stops out of the gate when we take our first two longs is really rare. So I just threw the brakes on it, and it saved me a lot of money because there were more long setups, and it really just would have been a fiasco in here. I could have easily taken four stops inside this area. This is why this is so valuable. Now, get below value area and look at where your setups are coming from, right? So we knew this was location. It actually set up on a 7-tick bar. I didn't have a 7-tick bar up, and that's all right. It didn't set up. There was no short that set up there either. Now, watch. So this becomes the wave to the low right here, and this is where it just did not set up. Like that was so picture perfect almost, and the algo didn't fire in the correct sequence that we needed it to. Happens sometimes. This is your wave to the low. Which bar do they start that on? Let's get it right. There we go. This is your wave to the low. And so I generally do not trade CL after 11 o'clock. I try to wrap it up before 11. Today was an exception to the rule, but if you follow the trading, so there's your orthodox close above. See that? That's your orthodox close above. This is now your trap sellers. Now, look for where your first buy entry is, guys. Right there. No demand. Algo fires on top. Your long was 81.51. Quite simply, right? Now watch what's going to happen. It's going to travel all the way back through that value area, and that's up into this evening. And again, it traveled once again all the way through that value area. I didn't take that trade. So today's a day of would have, could have, and could have been a really great day, and I just didn't put all the pieces together. More importantly, what we learned is if you stay out of value area and you look for those trades outside of value area, you should end up with a higher win rate. So let's do the last one. Let's go look at ES, right? So I got to track down my ES chart real quick. ES right here. And the value area on ES today was in the woulda, shoulda, coulda account 45.30 to 45.22. 45.30 to 45.22. Oh, no. Yeah, that's right. 45.30 to 45.22. So let's go look. $20.32. Okay. So this is an example of 8:30 a.m. And again, we don't trade the first half hour. 99% of the time, we don't trade the first half hour, right? It pushes into value area and never gets above. And you really didn't get a long entry even before then. It just started grinding, right? It wasn't moving very much. If you avoid trading inside here, first of all, this was your only long setup right here, and you had to be Johnny on the spot. Like it just got no significant extension, maybe 3 points, and that's okay, right? But look underneath, right? So here's your first trade. You're underneath the value area, no demand, engulfing bar. That puts your long right here, 45.18. It's going to push all the way back to 45.30. 12 points. Quite a dramatic difference from taking the trade inside a value area, right? Keep pushing through the course of the day. So you don't do anything in here. You don't take that short. So this is a case. So when you're looking, you got to remember if you're going to decide not to trade inside the value area, that means you're going to pass on this otherwise high out shorts. Again, this is right at the close of the day. So really when you look at this, and if you stayed patient, no one in my room, I don't think, was going to take this short, right? It was just, it's at the close. But plenty of people would have taken that long there at 12:30, and it was worth 12 points. The short did not develop for us in ES today, even though it got to location. We just didn't get that area. So if you look and you said, look, I'm going to execute outside of value area, 2 examples, 3 examples now of where getting those trades outside, waiting for it to get outside of the prior day's value area benefits you. I was going to go deeper into it. I'll explain this process more in the room tomorrow. I'm tired, but if you want to up the level of your win rate and increase the level of your risk reward and decrease the nervousness of, oh, will it stop me? Oh, will it not stop me? Guys, look for the turns outside of the value area. I can't put it any simpler. Now, when the range expands and we're well off the high, that will be a different story. You'll be able to scalp, particularly on NQ within the value area, but you have to be very flexible and you have to maintain that mindset of, hey, I'm outside of value area. This can be a bigger trade. And then there's going to be a couple of rules that go along with that. One of those rules is when you get above or below the value area and you get that, again, that negative space, you will notice that the first high odds setup, which actually came right at the close, generally work extremely well. But even in this case, that's a general rule. Even in this case, this was actually the high odds setup right here, and it stuffed you, right? So when I was speaking with Dietrich, I was like, look, it's in our mind when we're trading, it's pretty easy to go, yeah, of course I can switch strategies from inside the range to outside the range, and the stops don't bother me. But the reality is, for most of us, the stops do bother us, right? So it's much, 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 much easier just to go, look, I'm going to trade outside of value, and your extension on your trade should be higher, your stops should be fewer, and you're still looking for the same high odds entries when you're trading. So keep that in mind. Outside of value area, then the next area is above and below prior days, opens and closes, points of control that are untested, that are more than 24 hours old, right? And when all of that occurs outside that value area, it's very, very nice. You will perceive that you are missing some trades, but you are also missing a lot of stops that will take place within that value area because there's fewer people to defend a particular area. Many more people are willing to defend outside of acceptance than within acceptance. So guys, I hope it helped. I'm tired. I'm shutting it down. I will see everyone tomorrow. Let's have a good day. It's not been the easiest week, right? It has not been the easiest week, and following process, right? And watching our backside with capital management has been very, 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 very helpful to almost everyone in the room, myself included. So hopefully we have a great day. It should be a very interesting gap down with the Intel numbers, and I would not be surprised to see them run it up out of the gate, but we don't know that, and we don't need to know that. We'll just see what happens, and I'm quite sure the setup will come. Have a good night, guys. I'll see y'all later.